We are looking at the Euro-Canadian market from the demo account, and we can see that really nothing has happened at all. We are completely flat in the market with where price currently is in relation to our previous actual money position and our two entry orders. Absolutely nothing has happened. The market has been completely flat, and it's been pretty much like watching dry paint do nothing but fade in color. But at some point, though, this technique that we've learned, everything that we've gained in knowledge from what we have done, isn't going to be a demo anymore, but rather we're going to want to move to a live account. And that live account transition is going to be different. What we see in a demo account isn't always exactly what a live account is. Hello, I'm Robert and welcome back. Today we're actually going to talk about the differences between a demo account and a live account, and I'm going to show you my live lazy trading technique on a pair that isn't Euro-Canadian. We're going to talk about why I went with this pair and why it is such a good way to go, even though the pair itself is not the greatest. So let's get into the chart and really get down to the nitty-gritty. We can see by looking at the last 3 weeks of what we have been doing within the Euro-Canadian account. It has been quite boring. Nothing here really to suggest anything of value for 3-4 days of actual trading, but nonetheless, we can't deny the profits that we have received from this technique, from this account. Again, the balance is going to be reflective of the profits with proper risk assessment. But there's more that we can do. So let's actually get into that, and let's actually transition to a live account. Now I have one already in place, but we can see on the chart. So now let's go and click on live and go to my live account. And it is going to show my live trades. Now again, we are at the Euro-Canadian pair. The chart hasn't changed. This is one of the reasons why I like Oanda, is that the demo account is kept in line with the live account. But even though the chart hasn't changed, there's an extra piece of information on the screen in this red and blue, green line that kind of runs up and down the center of the chart. This is called the order book, and this is a piece of information that is not available in the demo account, but it is absolutely critical. The order book is one of the most important tools that exists in trading. It is absolutely wonderful in what it does, and it really helps explain what the market is doing in a visual way that can give you information for any trading style, not just lazy trading. So let's actually go through and talk about this more in detail and zoom out. Now we can see for the most part that it's not all that impressive. You have a few major areas on the order book where buyers and sellers are putting pressure that they want to see where price goes. Now the order book follows the pattern that we see on the screen with the buy and sell mechanics that we've gotten used to. The left side of the order book is the sell side. The right side of the order book is the buy side. Let's see if we can do this right. So the red is the sellers and the pressure they are adding through their selling positions. The green are the buyers and the pressure they are adding to the buying positions. So let's talk about the process that goes on in the middle of all this. The part that often doesn't get mentioned, but is incredibly important when you're trading. The sell side is always going to be slightly less than the buy side. And that separation is called a spread. For example, right now, the sell side is 4 pips smaller than the buy side. There's a reason for this. The order book is made up of entry orders, people publicly making their orders and their interest available for everyone to see. This spread is a reward to people willing to use entry orders as a way of helping them build the order book and keep the order book maintained. If everybody did market orders, nobody would know what was going on in the order book. In fact, it wouldn't exist. But because of this reward, because of this process that brokers and exchanges do, the order book is a way to visualize the depth, volume, and liquidity of the market. And that is absolutely critical. In terms of any trading style, knowing the volume and liquidity is paramount because it tells you how quickly the market moves, it tells you how much money is in the market, and it tells you how quickly you're likely to get out of a position, either at a profit or a loss. So let's look at this order book in detail, this red-green combination in the middle. We can see that the Euro-Canadian market does not have a lot of activity. It's a slow market. It's a dry market, as a lot of traders would call it. But that's fine. But it's faster than the actual live market I use. So let's see what a market looks like that has high liquidity, high volume. And that is, of course, one of the highest, really, Euro USD. This market is insane. We can see by looking at the order book, the red-green blotches in the middle, that this market is just totally off the wall crazy with people in it. Money moves rapidly through this market, and the liquidity and the volume of this market is just staggering. But that also means that the amount of profits and losses are also just as staggering. Hundreds of millions, if not billions of dollars a day go through this market. It is an incredibly difficult market to jump into right away. Even if you're coming off of a demo account into this market, seeing the order book for the first time, this is just staggering. And looking at the order book, looking at where the sellers are, the red section, and where all the trades have been placed in the limit order, all of this weight, all of this pressure above the price line indicates exactly where sellers want to go. And that is really a huge problem. So by looking at this whole dynamic, by looking at exactly where the sellers and the buyers are putting their pressure where they want to see the market go. We can see overall by looking at this information, both the buyers and sellers are agreeing that the price needs to go higher. And we know that because the dotted line right here, the current price, shows very little activity below the current market price versus above the current market price. So we can see that buyers and sellers want the market to go up in value, but they still want the market to stay within a certain range, or what they have both decided is a fair value. We can see that the sellers are a little more skeptical in terms of the fair value versus the buyers that are looking for more value. But overall, we can see the consensus of the market through the order book that our previous resistance level, the previous level by which buyers and sellers have agreed upon, is so far likely where the market is going to remain. This is critical because it applies to any market, no matter what market you look at. If you have sufficient volume and liquidity in the market, every market you look at through the order book is going to show this kind of a story, where the buyers and the sellers have agreed on what they want. And when you combine that with the market itself, with how price action is moving, and you see these ranges, and then you begin to see where and how prices begin to interconnect with the order book, you can clearly see why lazy trading works so well, why it is such a wonderful way to learn how to trade, or just to add to your daily trading as a mechanism to make money along the way. Now the whole point of transitioning from a demo account to a live account, a real market, real money. Now, take a good look at the order book, because now we're going to go to my live actual lazy trading. And we can see that the order book looks pathetic, disgusting. No volume, no liquidity. This market looks dead. It looks really abysmal. But that's actually why I chose it. I could have gone with any pair on the market, but I explicitly chose this one for my lazy trading because it is so flat. See, transitioning from demo to live, you want a market that gives you time to breathe, time to watch, time to assess. So let's go to the monthly chart, and this is live, and we can see that I have marked out my range already that I am interested in. The purple line is the median. That is the average between the highest high and lowest low of this market. This is the midpoint of that market. The red line, this is the market average altogether throughout the entirety of the life of this asset. And what is really interesting here, something that really needs to be looked at, and let me see if I can get this in larger. The distance between the purple line and the red line is actually huge compared to other markets we've seen. This tells us very clearly that this market has more of a downward pressure or a short selling pressure than a long or upward selling pressure. If the average is below the median, more than likely the market is going to do better in a short selling situation overall. This gives us a piece of knowledge that when we place our trades, if we want to really capitalize on what the market is telling us, we should do so in a short value way. That is, we should open up short positions. Now, in looking at the market, we can see that I do have some positions already open. And we see that I even have one position sitting in the winds, just waiting to trigger an entry order that is sitting in this order book, waiting its turn to be activated. But let's go in close. Let's look at the market and zoom in. And let's talk about what we actually see in this live market. So let's go in, go back to the daily chart, get back to where we belong, and here we see the last couple of weeks. Nothing all that impressive. We see that an open position is above the median. We see that the price is right now just above the median, and we see that it is pushing close to an entry position waiting to be triggered. The benefit of this market really is you can see the candles don't move a lot typically. It's a slow market. We can see the order book throughout this process. There's not a lot of activity, not a lot of interest. The people in this market tend to prefer to hold longer. And that helps us in learning the market from a live market standpoint. It also means that we don't need to worry about the market being so aggressive that it's likely to drop or jump a monumental amount in price value. That's not to say that the market can't just really skyrocket in one direction or the other, because as we can clearly see, the market does make some significant jumps, but it's not something that is over the top and obscene. It's not like the Euro USD, where the market is just going to be staggering all over the place with huge volumes of hundreds of millions of people actively trading. This market has a lot of participants, but it's ran differently. The buyers and the sellers aren't aggressive as much as they are in the Euro USD market. From the standpoint of volume and liquidity, the British pound Australian dollar market is not that great. It's one of the slowest markets I've worked with. From the standpoint of transitioning to a live market from a demo market, it is wonderful. It is the perfect way to get into the market on a slow and consistent basis and get an idea of how the market actually works. You're not going to make a lot of money here, but you're not going to risk a lot of money either. So it's really a wonderful market for a slower individual. Whether you want to just take a more lazy approach to it, maybe you only have a couple of days a week, or maybe you only want to look at the market on the weekends when it's closed. This is the perfect market for that kind of a situation. Really, it is just that much quieter compared to other markets you're going to work with. So as you progress, as you look at your market, be sure to focus on the order book. The order book is everything, because we can see by looking at the order book that the buyers and sellers really want a lower price. And you can see I've got my orders and my take profits set so that when they happen, I will automatically trigger off and make money. I've got my most recent order without a take profit, but still, we have a potentiality. And we can see just how the market has ran throughout the course. It's not been that aggressive. It's been quiet. It's been manageable. It's been reasonably orchestrated in a way between the two countries that they have mutual agreements on imports, exports, trades, things that make these two countries work well together for this market. So let me know what you think. How do you think this is going to turn out for this market? Is it a good market to be in? Is it a bad market to be in? Share your thoughts. I like it for the tranquility it brings to my trading. I like it because it's just the exact opposite of Euro USD. Instead of being chaotic with high volume and high volatility, it's relaxed. I don't have to worry about my trades simply bouncing up and down constantly in price value. Leave me a comment, share your thoughts, let me know what you think of this market. And remember, when you're switching from demo to live, from the standpoint of how you trade, that doesn't change. And don't switch until you think you're ready to lose all your money. The real truth is between the markets is unlike a live account, unlike a demo account, a live account has real consequences. Your real money now comes into play. A demo account is paper money. You can lose all you want and it doesn't matter. Only switch between a demo account to a live account when you feel comfortable with the possibility of risking your entire budget. Always be willing to risk everything you have in the market, and always be willing to lose it at the same time. Never risk more than you can afford to lose. Really is the biggest thing you need to take away. If you can't afford to lose $10,000, don't put $10,000 into your live account. When I first started trading my live account, I started with $500. That was it. And even to this day, I only have $1,500 in my live account. That is really the point of this whole process. Trade with what you feel comfortable with. Trade responsibly, trade sustainably. And don't let yourself get overwhelmed by the market. If you have any questions, please feel free to leave a comment. Let me know. Thank you for watching.